Senator Johnson, Senate Bill 176.
Thank you, Mr. Chair. Members, Mr. Chair, there is an amendment, but I'm going to go ahead and go through my portion of it first, if that's okay. Some of you, this is a repeat from last session, so if you'll indulge me one more time. Working in the auto industry for my entire adult life, I've seen consumers lose their job, and in some cases much worse, due to their inability to make it through a claims process, which could last as long as 6 months or even a year. In many homes, the family has only one vehicle, so when the vehicle is disabled, they can't get back and forth to work. Consumer legal funding would help these situations and others. The process for legal funding works in the following way. An individual has a car accident. The insurance company begins the process of adjusting the claim. Depending on the severity of the claim, this can take a substantial amount of time. During that time, the individual doesn't have a vehicle. They can secure an advance. And I'll say it's an advance, it's not a loan. They can secure an advance on the settlement of their claim. This advance would allow them to put a down payment on another vehicle, secure other methods of transportation, or simply just provide the basic needs for their family. We have put a number of safeguards in place in this legislation. The individual's attorney must sign off on the advance. The attorney can negotiate on behalf of their client in terms of the amount of the advance, the amount of fees involved. In addition, the attorney can deny the advance altogether should they deem it not to be prudent. Again, this is not a loan. Therefore, there is no recourse, no collections process should the claim never be settled in the individual's favor, or should there be any money left over, and should there be no money left over after paying the attorney. So for the attorneys out here, you're going to get your money either way. So I want to make sure that. And then also the repair shop would get their money as well. This advance cannot be used for litigation funding, meaning it cannot be used to fund lawsuits. This bill explicitly prohibits that. Currently, folks, this product is available in 45 states. North Carolina is not one of them. We'd like them to be the 46th state. I'll stand for any questions on, or we can go ahead and run the amendment if you'd like to, Mr. Chair. I'd like to bring an amendment forward. Members should have that.
Members, you have a very simple amendment in front of you. Senator Johnson is recognized for the amendment.
Thank you. Thank you, Mr. Chair. Members, the language in this amendment would allow broker-dealers to dual register and will harmonize the law to treat brokers the same as our statute governs investment advisors. It is a very simple amendment. Would appreciate your support.
So, favorable from Senator Alexander.
Question, Senator Johnson.
On the amendment.
So why don't you respond to why you're changing the title and what's the importance of, am I looking at the wrong?
She's asking about the minority contract.
I'm talking about your amendment.
The minority contract. 1 second, Senator Robinson.
And why are you including? That was not already in there.
Yeah, so it adds this to the title of it.
That was added to the bill as it moved. These sections, that's why they're updating it. It's already in the bill you have, but it's not in this amendment.
Oh, can you let staff answer
Sure.
how this has evolved, please? Tell me, so I'm not stupid about what's going on.
This is Bill Patterson with Legislative Analysis. Senator, the last committee amended the bill to add the provisions relating to ESOP companies as being considered part of the definition of minority business or economically disadvantaged business, I believe.
Oh, the last committee?
Yes, that was in Senate Finance. The only thing the amendment is changing as far as the long title is the part that is online. What's the amendment? It begins on line 7 of the amendment where it says, and to allow salesmen. That's the part that's being added by the amendment, Senator.
Okay, so I've got other questions. Another question, Senator Johnson. If you'll go to, unless I'm looking at it wrong, if you'll go to page 5 and talk to me about the fee, talk to me about how the charges are charged initially and how frequently and how that compounds. Maybe I got the wrong. I may not have the PCS. But talk to me about the fees. The PCS ain't gonna change that.
Senator Robinson, if you don't mind, I was in the middle of approving that one amendment. Can we do that and then come back
Oh,
to
I'm
this?
sorry.
Okay. Was there any objection to the amendment? Seeing none, the amendment is adopted. The bill's back before you. Senator Robinson, you're recognized. Thank you.
Okay. Okay, Senator Johnson. You can tell me which page I am, but the section is on 58-94-35, non-recourse obligation and authorized charges. I don't know whether this is the right
Okay.
page or
That's
not,
right.
because I may not have the PCS and all. So talk to me about the charges, the interest,
Okay.
and how that's compounded over time.
Mr. Chair, I'm going to answer the question. Okay.
He's talking about something. Mr. Chair, you want to chair this committee?
Senator Robinson, originally, in the original bill, this was actually a concession that we addressed last session as we were working through this bill. Originally, this bill did not have limits or caps on interest or application fees. We heard concerns from the Attorney General at the time stating that he had concerns about there not being caps in place. Many states, probably I would say most states of the 45, do not have limits on any of this, including Vermont, New York, and I think Illinois. Don't quote me on Illinois. So as a way to try to get some consensus on this, we wanted to put a cap at the 18% and the 3.5%. What I would ask you to keep in mind, there's no recourse on these and there's no collections on these. So there's a number of these that will never be paid back.
Okay, I'm not. Thank you, Senator Johnson, for that. And, I don't live in those other states.
Sure.
I'm concerned about North Carolina.
Fair.
And the citizens, most of the individuals who will borrow this money are very low income, a lot of minority, different races, but minority, who don't have a bank account, where they have savings, may not have other assets, investments, etc., family with money, like your family maybe. So tell me, over 6 months, the interest rate is 6%.
Okay.
What if this loan goes to 2 years?
Mr. Chair? This interest rate is an up to, not to exceed 18%. And as I'd mentioned in my comments earlier, the attorney that this person has entrusted to handle their case would be negotiating on behalf of them. And so if the company comes back and says, we're going to do 12%, and the attorney may say, no, that's excessive, we're not going to do that, we'll do 7%, or pick a percent that the attorney is comfortable with based on the conditions of the claim. And it could vary. If it's going to be a 2-year claim, it wouldn't make much sense to have an 18% because then it's going to exceed something that's reasonable. So the attorney would be the one that would have to approve the rate, negotiate the rate, and ultimately can deny this particular service and say, we're not going to allow that to happen.
You're saying the attorney has authority over negotiating this?
That's correct. And
But-
so a consumer cannot directly go to these companies and secure this. They have to go through an attorney.
Okay. But my point is that even with 18% over the course of a couple of years, this person could be paying up to 72% or 96% in interest. It's possible if
In
the
the
claims...
theoretical world, I don't know of an attorney that would approve that, but in a theoretical world, that's possible.
Senator Alexander,
Yeah,
you're
Mr.
recognized.
Chairman, and I believe my understanding is this is to help those folks, those very folks that Senator Robinson discussed, because this is one of their only recourses they will have in the situation where they had a car wreck or something like that. So this is actually geared toward helping those very types of folks that are in crisis and need some help.
That's correct, sir.
Senator Adcock, you're recognized.
Thank you so much. So I just had a clarification. I apologize if I missed this. So what
Senator
happens if the funds that the person who sought this, you didn't call it a loan, you called it
An advance.
advance, the funds they get doesn't cover the amount of money that was advanced to them, what happens?
Mr. Chair, thank you for the question, because I think that's the most important piece that I may not have clarified. So of course, the attorney's going to get their fees for
Right.
for handling the claim. The repair shop, they're going to get theirs. And if there's no money left, there's no recourse on the loan. The loan is just not paid. There's no collections. There's no credit filings. There's nothing. It just goes away at that point in time. If the claim is more, it still goes through that lien process. And then once it gets down, and the loan, or excuse me, so you got me saying loan, the advance at that point in time would be paid, and then whatever's left after that would go back to the insured.
Follow up.
Senator Adcock, you recognize.
So what if the amount of money that's recovered doesn't even cover the attorney fees? They just get whatever is there?
So if the attorney, again, would have to approve this process, and so I would, as far as that attorney taking on the case to begin with, and I'm not an attorney, but I would think that they would be able to determine if they were going to actually take the case. I think that question would be outside of the scope of what this service would allow, because they would be the ones that were giving it a thumb up or a thumb down, and they would not venture into that area.
So I did have a follow-up to Senator Robinson's question. I worry about, at the end of the day, what's the possibility of the person who is injured and who needed this advance, which I understand that could be very helpful to them, would they end up owing the attorney money because that came up short? And I know you can't predict that, but I'm asking you based on the experience of other states. Perhaps, I don't want anybody to be caught in that example if they can.
Mr. Johnson.
If it can be avoided.
Thank you for the question, Senator Aycock. I am unaware of that situation occurring or haven't heard anything about that. Mr. Chair, I would advise there are folks from the industry that could potentially speak to Senator Adcock's specific question if they would like to
That'd be very
give it a
helpful.
shot.
Do that. All right. I believe we've got a couple folks up there. Yep. Get you to come up and state your name, Ms. Sherry. Go ahead. You're
good. Thank you very much. My name is Jonathan Lang, and I work for Omni Healthcare Financial, which is a company that provides these types of advances. And interestingly enough, we're headquartered here in North Carolina in Huntersville, but it's one of the states that we can't operate in. And to answer your question, what we do is we work with attorneys, and for the situations where there's not enough money to go around, we end up having to usually take a haircut on that. We can't go after people outside of the settlement. And so if there's not even enough to cover the attorney's fees and costs, so the case settles for a verdict of $1,000 and the attorney spent $5,000 in fees, the attorney's writing off $4,000 probably, and we're taking a zero on that. There's nothing we can do. We only can collect if there is an excess.
Yep.
So
Thank you,
hopefully that
Jonathan.
answers your question.
Appreciate that. Yes, sir. Senator Perry has been patiently waiting. Senator Perry, you're recognized.
Yeah, I think I might be able to simplify this a little more, and I am one of those poor families. My mother got married at 14. My dad died when I was 3 months old. My mom's got an 8th grade education. So I understand the difficulties when you don't have family to go to get money, you don't have any resources. But the people in this business are the ones shouldering the risk, and they're the ones that understand the risk. He mentioned they can't go directly to one of these companies. It's an attorney going to the company. Well, the financial people and the attorneys, I promise you, they understand the math, and they have no interest in taking losses. So this is only going to happen on cases where situations where they feel like they're reasonably assured that there's going to be enough money to cover anyone. But I think the big stopgap for the individual is it's non-recourse. So if they are advanced, $20,000 or whatever to cover expenses, and then the case doesn't work out the way the attorney thought, and they don't make payments on that, or they just stop paying, it's over. There's no recourse on them. There's no way to go after them. So, the most educated folks on the subject are weighing out the risk and saying, hey, we think this is going to work out for everybody involved. It's not like they're going to do it on every case. The people lending the money have no interest in doing that. They're not in the business to lose money, and they've got nobody to go after. So those are the safeguards around it, or the people who understand finance the most are the ones working out the terms based upon the likelihood that things are going to work out for everybody, and it's non-recourse to the individual that the attorney negotiates on their behalf. So those are the natural protections on it. And if somebody doesn't provide funding like this, who else do they go to? You know, who's going to help them? It's not to fund the litigation. It's to help with the other issues that Senator Johnson mentioned earlier. There's no rich uncle in this equation to help them, or daddy, or anybody to underwrite them. So there's always a need for stuff like this. I know it gets emotional, but if not them, who? You know, who's going to help them?
Thanks, Senator Perry. Senator Applewhite, you're recognized.
Thank you, Mr. Chair. I have a question for Mr. Jonathan Lane.
Yes, ma'am. Jonathan, if you don't mind.
Yes, thank you, Senator.
Yeah, thank you, sir. Realizing that these companies are in the business of making a profit, can you give us an idea how lucrative this is, since you said you oversee these operations in different states? Can you just give us a general idea of how lucrative this is for these businesses?
Absolutely. And the first thing I'd like to start with is there's nothing that says that you can't both help people and make money at the same time. And that's really the philosophy that we as a company, and when I was practicing as a personal injury attorney, also what we really adhered ourselves to. And when you think about it, the margins on this are actually pretty slim. And especially in the credit environment that we're in now, you can see that the rising rate environments. So if you think, and I'm just going to use some generic numbers, there's obviously confidential things I can't disclose, but let's assume even that it costs us 10+% to get money to even turn around to give to people. So, I mean, that's a huge number off the top. You add in all of the operations. We have 140 employees right now that we work with. So there's a significant cost on top of that. And then plus on top of that, you have to have all the write-offs that you do, which generally is probably about 8 to 12% of anything that we put out. We're going to get a zero on it. And that's not even, that's a true zero. And that's not including all of the things where there isn't enough money to go around, like Senator Adcock said. And we gave someone $4,000 and we're getting $1,000 back. And in that situation, you know, it definitely helps that person when the things do go sideways, that they're getting the $4,000 we gave them from day one. But most importantly, one of the big checks here is that we have attorneys that work with us. And I'm straying away from your question a little bit, but you know, attorneys that work with us, and that is absolutely a check for people, is that if we don't treat their customers and their clients right, that attorney's never going to call us again. So when things kind of go sideways, we have to make it work, and that kind of contributes to why we're not collecting the full amount. And moreover, I'll ask this one question: what attorney have you ever known that doesn't want to negotiate something? So anytime that you see these numbers, at the end of the day, even if the person owes $4,000, attorneys call us up and say, hey, Jonathan, you know, on this case, let me explain what happened. Can you guys take $2,500 instead of $4,000? You know, so there's always, so those are all the things of why the rates are what they are. And it may seem like a high number, but when you actually back out how the industry works, how reductions work, how losses work, and how the cost of operations work, it actually ends up being pretty slim margins on this.
Follow up?
Senator Applewhite, you're recognized for a follow-up.
If you could please just make it really plain for me. That was a long response. So without revealing any confidential information, we don't want to know that. But you said that you oversee this in various states. If you could just give us a ball, you know, the revenue that company X generates in a year from this sort of operations is, you know, $1.5 million. Just give me a ballpark figure. I'm trying to figure out, obviously you're in this to make money, and I realize that there's small margins. I'm just trying to get a feel for how lucrative this
Senator
might
Applewhite,
be.
if I may, Jonathan, are you a publicly traded company?
No.
Then that information is not germane today, and
Okay.
I'll move on. Thank you. Senator Alexander, you're recognized for a question.
Oops.
Point of order, please. Are you,
Senator Applewhite.
Mr. Chair, so are you saying that because he's not publicly traded, that we don't have the right to
I was telling
ask?
you as the chair's opinion, that's not an appropriate question today, Senator Applewhite.
Thank you, sir.
Senator Alexander.
Yes, thank you, Mr. Chairman. These are actually very good questions and good discussion, and ultimately what I think it does is it points to the importance and the need of this particular product, and it's voluntary for the people who are in crisis, and but it is a means that of almost, I guess, if you will, last resort. So having said that, Mr.